You're listening to The Real Wealth Show with Kathy Fettke, the real estate investor's resource.
What is going on with home sales? Is it a buyer's market, a seller's market, a sit at home for a while and quarantine market? I'm Kathy Fettke, and welcome to The Real Wealth Show. Our guest today is a name you will probably recognize because he's in the media all the time. Lawrence Yun is Chief Economist and Senior Vice President of Research at National Association of Realtors. He oversees and is responsible for a wide range of research activity for the association, including NAR's existing home sale stats, Affordability Index, and home buyers and sellers profile report. And he's here with us on The Real Wealth Show to share with us what's going on in this unprecedented situation. So Lawrence, welcome to The Real Wealth Show.
Hi, hello, Kathy. Thanks for having me on the show.
What a month.
The economy hit a brick wall. At the beginning of the year, I was feeling very comfortable that we will have the longest economic expansion ever continuing. Everything was lining up well. Then we just suddenly hit a wall from this unforeseen virus, how damaging it is for health as well as for the economy.
Yeah, I mean, just prior to this, we were looking at headlines of home prices continuing to increase, lack of inventory. Where are we today, just a month later?
Going into this coronavirus situation, the housing market was in a healthy condition. If there was one area of imbalance, it was just lack of inventory. That is from the accumulation of builders unable to produce adequately in line with, say, population growth, certainly inadequate compared to how the California job growth has occurred. And therefore, we have had a massive housing shortage, pushing up home prices way above people's income growth. So the affordability became a challenge. And now, you have the buyer interest essentially diminishing, a combination of the fact that stock market correction, just natural hesitancy from uncertainty, and second, just from the stay at home directives from government authorities. So people are just trying to be patriotic. They want to get this coronavirus out of the way, so they are staying at home.
There's no one U.S. housing market, right? So are there certain markets that are more affected than others in this, or is it across the board?
It is across the board, pretty much. I mean, there is some nuances. For example, in Pennsylvania, the governor essentially said one cannot show homes for potential clients. No one can visit a home. While in other states, like in Virginia, one can show a private showing, make an arrangement, follow the social distancing rule, and realtors being very resourceful would say, first, here's sanitizers, don't touch anything in the house, and then they are able to show the home. What we are finding also is that many realtors are trying to use non-human contact process. So whether it is virtual tours, electronic signatures, or even after the contract signing, the exterior appraisal on many property without needing to go inside. Yeah. And for home inspection, I mean, that is just a one-person, clearly large social distance can be placed, and the home inspectors' interest to put on the gloves, mask to check things out. So we are seeing that home sales are still clicking, but not to the degree that we had anticipated for this spring buying season that we are currently, in essence, missing out on this was supposed to be a very strong spring buying season.
Yeah, and this could play out many different ways if we get through this more quickly, if there's containment, a cure, a vaccine soon by summer, probably unlikely, but if that were the case, would you see pent-up demand and potentially a bounce back, or what are your thoughts on that?
Oh, well, first, when we say there is a decline in buyer interest, that's also just, again, being, people just following government authorities' directive from that. But also many sellers are delisting the properties because sellers do not want strangers visiting their home. So they are being much more selective, or they're saying, if we're going to be selective, why don't we just postpone for a couple of months, temporary off market. So we are seeing many property in that situation. So we have a decline of buyers as well as a decline of sellers. But the reasoning for that is they just want to get this health risk out of the way. So once we have all clear signal from the government, maybe vaccine is discovered or they find some mitigating efforts with, let's say, testing of the coronavirus, massive testing along with social distance, as how some countries like South Korea has been able to now get back into the economy, where economy is now beginning to function more normally. So maybe either that or, the big win would be that vaccine discovery. But irrespective, the reason why we have a fewer transaction, lower buyer and seller interest is because they just want this economic shutdown to be out of the way and given an all clear declaration from government. It could be in 1 month, it could be in 3 months, 6 months. We have to wait and see. But my view is that what is missed out will come back pretty much with a delay. Only exception is maybe some families with school-age children who have planned on making a move before the next school year. And generally families want that because they don't want to bring their kid in the middle of the year, which could be a little disruptive psychologically. So some people who miss out on the closing by summer, they may say, why don't we just wait 1 more year before starting the process? So we could have few people who miss out in this delay, but for the most part, I think that spring buying season could become autumn buying season.
Yeah, I mean, it just depends. We put a house on the market in California and got full asking price, and they're still in contract moving forward. So it just depends on the situation. There's also some people who would really love to be in a home right now versus an apartment or a condo. They want space, they want a yard. They don't know how long this quarantine is going to last. So we, in our personal network, we have actually seen an increase in demand for properties and an increase in demand for rentals, but we were in the affordable range. Speaking of which, this is a huge concern and unexpected outcome, as everything's been an unexpected outcome, but the jumbo loans seem to have disappeared. How do you see that affecting the higher end market, which was already kind of slowing?
Well, Kathy, I'm glad to hear that you are able to get the business deal done because again, we have people who are able to put things all together, electronic signatures and whatnot. So congratulations on your own personal efforts. And also before the coronavirus, we saw the bifurcation between the upper end and the starter home market. Upper end was somewhat softer. And that's part of the fact that the property tax deduction is more limited now than before. A $10,000 state and local income tax deduction. So someone owning a $4 million property, they have large property tax. In the long past, they could fully deduct. Now they cannot. So the upper end market has been softer before the coronavirus, while the low end was super hot. And I think the demand for the low end of property will still remain to be very hot once we go over this crisis. Now on the jumbo loan, this is a unique, I think, temporary situation. What's happening is as part of the stimulus measure, and I'm glad that stimulus measures are this massive, people who have lost jobs or lost income, the goal is to pretty much replace the lost income, hopefully almost to the point to make the person whole. In a few cases, a person will actually come out ahead because the federal government's $600 per week unemployment insurance on top of the state unemployment. So it could be even $1,000 per week. So someone working at a cashier before the virus now may be a little bit better off in terms of going through this crisis. But of course, unemployment checks are only temporary. But now having said that, with the intent of the stimulus package trying to make people whole or small businesses able to come back after the loans and grant process, is that for homeowners who lost jobs, they can miss few months of mortgage payment, or even up to 12 months if it's backed by Fannie and Freddie mortgages. Many homeowners are unaware where it's backed. They just have a mortgage, but through the mortgage servicer, if it's Fannie and Freddie backed mortgage and that person cannot pay, then that loan will be forbearance. They will get that forbearance where it will be just tacked on towards the end of the life of the mortgage. So whatever is missed will be tacked on towards the end. Now, if they have to sell the home earlier, they are just losing out on some housing equity because they're not adding to the mortgage payment for the principal. But in that process, the mortgage servicers have to pay property taxes, they have to pay property insurance, and they have to pay money to the mortgage investors. So if the homeowners are not paying the money to mortgage servicer, where are the mortgage servicers going to get the money? Right now, they're getting squeezed. And because they're getting squeezed, they're saying we don't have money available for jumbo loans, which is the reason why it's not available or at very high interest rate. We pass this information to the Federal Reserve as well as to the Treasury because this is not their intent. Their intent is to assure that liquidity market functions normally. They don't want anything to gum up. So I think the Federal Reserve will step in to say, here's a short-term loan for the mortgage servicers, so you can make those property tax payments and whatnot. And then once the economy is open and back up and running, and the people are paying mortgages, you pay back the money back to the Federal Reserve. So I think it's only a temporary situation. Just hang in for people who are looking for that expensive home utilizing jumbo mortgages.
So you think jumbos will come back?
I believe so. I think the intent is not to squeeze out the liquidity from one segment of the market. They want everything in the economy to be functioning well until we find a cure for the virus.
Okay. Are you seeing any uptick in potentially cash buyers or investors versus homeowners at this time?
Well, yeah, I think some of the astute real estate investors recognize the fact that there are fewer buyers in the market currently. And if the investors are in a comfortable cash situation or they have a secure job while they have saved some substantial amount of money and they want to purchase all cash without any hassles of mortgage, they say, well, what do you see? Less buyer competition. I think I can make for better price negotiation, knowing that some sellers may want to unload rather than keep waiting and waiting. So some real estate investors may want to take advantage of the current sort of temporary situation where we are lacking buyers, so they don't have to compete aggressively.
And we are certainly seeing that. We mainly represent investors, and they don't seem to have slowed down from our perspective for that reason, because there's not as much competition, and that means potentially better deals, especially when we've been dealing with years and years of too much competition and the inability to even find inventory.
Yeah, and once the economy reopens, we're going to face that housing shortage, which means that we will see price appreciation on the starter home mid-price. So real estate investors, they will be getting all that capital gains right away, along with whatever rental income, if they can find a tenant or that is their intent.
Now, do you still expect there to be a housing shortage with so many people who've had job losses, who may be moving back in, maybe a slowdown in all the household formation? Do you think we'll still have this issue of inventory after all this is said and done?
Job losses are unprecedented. In the past recessions, in any given week, people who are filing for unemployment checks for the first time, it never exceeded 1 million. It never exceeded 1 million, even in the worst possible time. What has happened recently? 3 million people filing for unemployment insurance in 1 week. The following week, 6 million. These are off the chart figures. And we may get another higher figures in the upcoming weeks. So these are massive number of people who are filing for unemployment insurance. Now, hopefully some of the stimulus package will limit the people who are getting laid off because it's providing cash to the companies to not lay off workers. But let's also look at the other end, which is to say, once the economy is open, will these small businesses who run, say, hair salon business, will they reopen? Will there be demand for hair care service? What about daycare? Will the daycares reopen or will it remain permanently shut down? And if the answer is many small businesses, restaurants will reopen, then we can also anticipate equally strong job creation. So after a massive tens of millions of people losing job quickly, we may get, say, maybe not equal amount of job recovery, but something very high, 8 million job creation in a single month, which would be off the chart positive number.
Right.
Now, of course, some industry like cruise ship industry, I think it's going to be a very long haul in terms of how to get fully back to normal. But I think many other industry will come back alive quickly.
And maybe even more so. Maybe there'll be more people looking for childcare after all of this. Maybe an uptick in divorce attorneys. Just kidding. I hope not. Okay, so what about foreign buyers? We know that foreign buyers really had stimulated the housing industry here in the U.S. for a long time, and then it kind of slowed down. What do you predict there? Because it's really a global issue, right?
I think the travel restriction, that, and also just people just being a little more mindful of not to be with so many people in a enclosed area, that the flight may not fully return back to normal, which means that for international buyers, if they cannot utilize their real estate that is purchased in the US by, say, Chinese or, say, British, there could be less demand from the foreign investors purchasing here in the US. So that one is a wild card. I don't know how that will play out. I know that even before the coronavirus, because of the strong dollar, it had reduced some of the foreign buyers in the US in 2019. Dollar has become even stronger during this financial crisis. It always happens when there is a global financial panic. Everybody wants to hold at least what they feel more safer, which is the US dollar. So
Yes.
that dollar has strengthened, which means it makes it more expensive for foreigners to purchase. So it's a more difficult for the foreigners to get involved. And if there is more, say, border restriction, international travel, a greater check hassle from, say, travelers' point of view, they may say, I want to purchase domestically rather than purchasing across international borders.
Now, when we say we had this housing shortage coming into this, about how many houses short were we, in your opinion?
Well, in my estimation, nationwide, it's about 5 or 6 million housing units,
Wow.
whether apartment units or single-family homes, based on the population growth and the job growth that has occurred in the country. And U.S. is one of the few lucky countries among industrialized countries with population growth. Every year, about 3 million babies are born every year in the U.S. So we have this natural growth in the population, and of course they age over time, and there's a need for housing. And based on the number of housing starts, we have not kept up, and consequently about 5 to 6 million units short currently.
And there were some articles I'm sure you saw that as seniors age and pass on, that there would be this glut of homes in certain areas. I know some people have said, "Oh boy, well now that there might be more seniors passing now more sooner than expected." Did you have any concerns about that report, that there would be suddenly this mass of vacant homes?
I think we may have a situation where there is a little different matchup between what the buyer preference. Millennials do not want that gigantic size McMansions,
Mhm.
but the demand is very strong among the millennials looking for starter homes. But overall, I would say, given the housing shortage, people will become very creative. We know that the fastest growing demographic group is Hispanics along with Asian population. And they're very comfortable with multi-generational living arrangements. So
Mhm.
large McMansions is not for one family, but it could be for multi-generational living style. So there will always be a demand. I think currently the upper end market, just a little softness because as people are adjusting to that, again, the property tax deduction being limited, and also the stock market correction of recent times, I think that also dampens some of the financial capacity among the high-end buyers.
Yeah, it really seems like the high end, there could be a huge opportunity for investors in the high end as the jumbo loans, who knows how long it will take for those to come back. That could reduce prices further in that area. But like you said, that there's an opportunity, maybe co-sharing or senior living, a boutique kind of senior home, since maybe more people wouldn't maybe want to have their grandparents or their parents in a larger senior facility. So there is definitely opportunity, maybe buying a bigger house and renting by the room, or like you said, co-living. Boy, for the first time in my life, I think I'd love to have my kids and my grandkids living nearby with me. Of course, I don't know if they're listening to this. So very good. Okay. Well, if you were buying something today, because again, my listeners are investors primarily, they're looking for the deal, what would you buy? It seems to me like the affordable housing has been the most difficult to build, if not impossible. There's the greatest demand for it, so it doesn't really seem like we really get a hit on the affordable housing. Any thoughts on that?
There will not be an oversupply of homes at the affordable home range. So for real estate investors who are able to find that property and can get a good price on it, I think that is an easy winner for real estate investors. And also it depends upon the cities, where there is a steady, consistent job growth. And I would characterize most Western coastal cities from San Diego all the way up to Seattle, but also the interior, especially the Rocky Mountain states of, say, Salt Lake City, Denver, Boise, Idaho, Phoenix. I would be very optimistic in these markets.
Awesome. All right. Well, thank you. I know you've got a million things to do and a million interviews. Thank you so much for being here on The Real Wealth Show. Really appreciate it.
Thank you, Kathy.
And thank you for joining me here on The Real Wealth Show. You can listen to this and any past episodes at realwealthshow.com. Have a great day. Bye-bye.